Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 30th, 2025, and we're diving into Unum Group's second quarter earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Unum Group, a leading provider of workplace benefits, has just released their Q2 2025 earnings report, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Unum Group reported total revenue of $3.36 billion for the second quarter of 2025. How does this compare to their performance last year?
Unum's revenue increased from $3.23 billion Q2 2024 to $3.36 billion this quarter. However, net income decreased to $335.6 million from $389.5 million last year. The adjusted EPS came in at $2.07, which is below the forecasted $2.23 by analysts.
And what factors contributed to this decline in net income?
The decline in net income is primarily due to investment losses and higher policy benefits expenses. Despite these challenges, Unum maintained strong core operations with a 4.6% premium growth on a constant currency basis.
Segment performance analysis. John, can you break down the performance across Unum's different segments?
Sure. The Unum US segment reported an adjusted operating income of $318.2 million, a decrease of 11% from last year. The Unum International segment saw a slight decrease in adjusted operating income to $41.6 million, while Colonial Life reported a marginal increase to $117.4 million.
What were the key drivers behind these segment performances?
In the Unum US segment, the decline was driven by lower investment income and higher benefit ratios. Unum International benefited from strong premium growth, particularly in the UK, but faced challenges with higher benefit ratios. Colonial Life's performance was bolstered by increased premium income and investment income.
Strategic initiatives and capital management. Unum has been active in managing its capital and strategic initiatives. Can you elaborate on their recent actions?
Unum successfully closed a long-term care reinsurance transaction, which is a significant step in reducing exposure to their closed block. They also repurchased $300 million worth of shares in Q2, bringing the year-to-date total to $500 million. Their book value per share grew to $65.76, an 18.2% increase over last year.
How does this reflect on their overall financial health?
These actions demonstrate Unum's strong capital position and commitment to returning value to shareholders. The reinsurance transaction is particularly important for risk management, while the share repurchase indicates confidence in their financial stability.
Future outlook and CEO insights. Looking ahead, what is Unum's outlook for the rest of the year?
Unum has revised their full-year after-tax adjusted operating income per share outlook to approximately $8.50. CEO Richard P. McKenney expressed confidence in their resilient business model and strong capital position, emphasizing their focus on risk management and growth strategies.
What are the key areas they are focusing on?
Unum is prioritizing capital-efficient, high-return businesses and continuing to execute on their risk management and capital deployment strategies. They are also focused on delivering strong premium growth and maintaining a solid balance sheet.
Key takeaways. In summary, Unum Group's Q2 2025 results show a mixed performance with strong revenue growth, but challenges in net income. Their strategic initiatives and capital management efforts are commendable. John, any final thoughts?
Unum's focus on risk management and capital efficiency is crucial in navigating the current economic environment. While they missed EPS expectations, their strategic actions position them well for future growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Unum's performance in the comments below.